Hey, what's going on, everybody? New week, new episode. So that week went by fast. I don't know about y'all, but this was Black Box Beat. What's up, everybody? I'm Kang.
I'm Maria.
And I'm Hells.
All right, folks, let's get right on into it today. Whole lot of stuff going on. We got ERs going on. We got stuff to talk about. Let's get it popping.
All right, let's start with earnings. So we've got quite a few earnings this afternoon, especially for it being kind of later in the earnings season. Let's see what we have out so far. First is OKTA. OKTA reports Q2 adjusted EPS 31 cents on a consensus of 22 cents. Q2 revenue 556 million on a consensus of 534.54 million. That is a beat for the reporting quarter. They see Q3 revenue 558 to 560 million. That is a slight guide up. The consensus was 552.37, and they are raising their full year 24 revenue view to 2.207 to 2.215 billion from 2.17 to 2.185 billion. Consensus 2.18 billion. So overall, seems like a pretty decent ER. I don't know what it's doing after hours. Let's see.
Okta was up last I looked about 7 points. So they had a nice pop off of it.
So nice pop there. Another big one for this afternoon is CRM, Salesforce. CRM reports Q2 adjusted EPS $2.12 on a consensus of $1.90. Q2 revenue 8.6 billion, consensus 8.52 billion. So that is a beat for CRM. They see Q3 revenue 8.7 to 8.72 billion on a consensus of 8.66 billion. That is a slight guide up for them as well. And they are raising full year 24 revenue view to some 34.7 to 34.8 billion from 34.5 to 34.7 billion. Consensus 34.65 million. So also a beat for CRM, surprisingly, and they are also up after hours. It looks like. Another big one that everyone's been waiting for is CrowdStrike ticker CRWD. They reported Q2 EPS 74 cents, consensus 56 cents. Q2 revenue 731.6 million on a consensus of 724.13 million. That is a beat. And they see Q3 revenue 775.4 to 778 million, consensus 773.97 million. So they are guiding up slightly there for Crowd. I don't have any full year guidance for them. However,
It's a
do we
very
know what they're doing?
boring reaction.
Oh yeah, that is super boring for them. Actually, I do have full year guidance for them. They see full year 24 revenue 3.03 to 3.04 billion, consensus 3.02 billion. Very slight guide up. Kind of interesting to note, at least out of some of these bigger ones, beats, okay beats, they're not astronomical or anything like that. Very, very slight guide ups, which is, in my opinion, is kind of interesting. We've got a couple more. CHWY reports Q2 adjusted EPS 15 cents on a consensus of minus 5 cents. They reported Q2 revenue 2.78 billion, consensus 2.76 billion. That is a slight beat for CHWY. Now let's see what else we have. Five Below. Five is usually a good one that we like to watch. Five Below reports Q2 EPS 84 cents on a consensus of 83 cents. Q2 revenue 758.98 million. Consensus 758.59 million. Very, very small beat for them. They see Q3 revenue 715 to 730 million. Consensus 737.8 million. That is a slight guide down, and they see Q3 comp sales flat to up 2%.
Yeah, and they are not impressed.
No.
That's a nice little $10 shakeout.
No, they did back their full year 23 revenue view of 3.5 to 3.57 billion, consensus 3.56 billion, and they see full year 23 comp sales up 1 to 3%. So nothing super exciting out of them. There are some other ones, but let's go ahead and get into some of this other stuff, and we can come back to earnings for. We'll come back to earnings in a minute.
All right, Mari, did you want to talk about Apple?
Yeah. I do want to talk about Apple. Guys, remember we talked about Apple last week? We bought
We
Apple.
did.
I got some messages from people that were like, hey, why are you buying Apple? Why are you buying Apple? So again, just to kind of recap, back on the 17th, we bought Apple. Those were the September 29th 180 calls that came in. It was over $1 million in a single sweep. It caught my eye, and you'll see that came in right at that low on that chart. And looking at OI, yes, it looks like there's been some profit taking through there. However, The event, we have learned the Apple event has now been moved up to September the 12th. So we've got a little bit less time, which is fine. These calls are up almost 200%. So
Woohoo! Very nice.
it's been a good play so far. I may potentially take some profit along the way, but I do plan on holding just a little bit longer. So Apple did work out well. That is your 1 week update there. And you'll see those headlines running through. Apple schedules iPhone 15 launch event for September 15th. There's some other interesting Apple news too. Today, it looks like they're going to be trying to 3D print some of their stuff. They're at least testing it. So kind of interesting. So that's what we have for Apple. What do you guys have?
I wonder if they're going to
Honestly,
use
that
AI
was
to do
such
it.
an unbelievable run that Apple had. When you looked like we were all going to die. What was it? Was it yesterday or day before? Or the day before that? One of these days recently, with the red candles coming down, it's like Apple was definitely under a lot of pressure. But the rebound that it's had has been just as remarkable as the market in general. Coming off of last week, so it's like Apple proves once again that they are the giants. They are giants among men at this point.
Whoever that person is that came in and bought those, they bought them right off that recent low. That was
Yeah.
another reason I liked it. It was close enough to a prior area of support. They picked it up right there. And then obviously the event, we know historically Apple runs into that. They like to sell off on the event, but typically Apple likes to run. So that is why we picked that one up.
Yeah, great trade, Mario. Really, really good job.
Speaking of this week, we've had a lot of data that's hit this week. So we've had jolts. But what's interesting is it seems like bad news is good news. So we had jolts, consumer confidence. Both of those were a miss. I know that the Fed is probably going to like the miss and jolts. Then today we also had misses on what we got this morning. So it's been very interesting. And of course, we've got PCE tomorrow. We've also got initial jobless claims. We've also got Chicago PMI tomorrow. Then Friday, that culminates into the big jobs report. That's the one I was thinking about. We got ADP today, and that was ADP and GDP both this morning were misses. They came in lighter, but the market seems to like all of that so far. It's been very interesting. So I'm looking forward to seeing what data we get tomorrow and Friday, kind of what that looks like to kind of round out the week.
I agree. That was a great move. What was that yesterday off that Jolts number? That was crazy, insane. That was more than a freight train, but fun. It was definitely a lot of fun.
But who would have thought? This is my thing though. I mean, I know we always talk about how, or one of the old adages in the market is how like price action drives sentiment. But who would have thought, like a few days back, like last week, people were thinking, oh, 4,200. Let's see if we're going to test 4,200. That's a key level of support. And then I'm seeing on social media after Jolts comes in, like that one number that was light, and everybody's now like a whole bunch, well, not everybody, but a whole bunch of people are like, all time highs, all time highs. Like sentiment turns on a dime.
You're
Well,
right.
I think you're kind of going to get that if you go back and you parse through what Powell said at Jackson Hole. It was basically we're going to be data dependent. We can't do too much. We can't do too little. We're going to let the data decide. The data is working in their favor. So as long as it continues to work towards their goal and what they're trying to achieve, there's no reason why the market shouldn't push higher. Now you start getting these pops of inflation. You start getting like really dramatic unemployment numbers coming in that are a little bit sketchy and scary, then you have a different story. But in the meantime, it seems like they're like, okay, it looks like it's fine for now. We can continue to move to the upside. We continue to push this back the other way. And we'll deal with the problems if and when they come. The idea of risking off over the last couple of days is not a part of the equation. There's a lot of risk going on intraday, and they're holding through, which is that much more remarkable.
Agreed.
Well, let's get right on into Shag, Marry, Kill. That brings us on to our next segment. All right, folks, this is one that everybody's been waiting for. Maria, take it away.
Okay, my pick for this week is on Wix. So Wix, we rarely see flow into. This morning, they came into the October 95 calls. It was a little under 500K. And again, I like this one because we rarely see any kind of noticeable flow. And it's a growth name, right? It's a great growth name. It likes to move when it wants to move. And looking at that daily chart, it looked like it was a decent spot to kind of pick that up. That's a little bit of a longer term chart. You'll see fairly close to an area of support. I like that. on the current OI. You'll see today's volume. I definitely want to see what OI looks like tomorrow. I want to see how much of that stuck overnight. How much is being held. But for now, it's a shag for me. I like it. We are in this, and I think those are now pretty sure. I didn't see where wicks closed, but I'm pretty sure those are now in the money. They are. They are in the money.
That chart looks to me like it could be kind of bottoming out. I'm not real familiar with their business. So don't they make websites or something like that?
Mhm. People
Yeah,
can create their own and stuff
yeah,
like that.
yeah. Looks like it could have a bounce. It's gotten beat up pretty good there. So it's like, why not? Why not give it a shot?
Right.
Woohoo. When I hear Wix, I thought of, it's funny you asked that, Hells, because like I like working on cars. So like anybody who goes to O'Reilly's will tell you Wix, you always think about filters, like they're oil filters. So when I hear Wix, I always think about oil filters. Anyway, I like it, Maria. I like the chart. I'll roll with you. It looks like it's kind of forming a base there. So we'll see.
All right.
This is one that I've covered before, y'all, and I know I'm about to I might catch some flack. I thought about pulling out like as a prop. I thought about getting some baking soda and like a little baggie, or putting some on the end of my nose, but I feel like management might frown on that, so I didn't do it. But Nvidia. Now I put on a small position today, just based on the chart. 500, serving as some decent resistance. We got up to 499 today, kind of backed off a little bit. This $1.2 trillion market cap, look, I'll just say this really quickly. AI, I think, is revolutionary in the long run. I get the whole double ordering from China, pulling forward a lot of their demand. I get all that stuff. I think AI is going to be revolutionary. And right now, it's Nvidia's market to lose. But it's like, right now, what are we doing with AI? Right, other than having it write a term paper or an email, and maybe some sex bots have got some AI in it. Like maybe you go to you know McDonald's and it orders some food for you and remembers what your order is. Like, I don't know what the transformative part of it is right now. Like today, does it have potential in the future? Sure, but anyway, they're selling the gangbuster. They're selling these chips like gangbusters, but I do think there's definitely an air pocket underneath. So what I'm going to be watching for, and especially the chart that I sent in today, we're at a prior area of support that has now turned into resistance, and we got over it today, backed off. I want to see if we can break that 500 or 502, but if we cannot, then the area that I'm looking to below is going to be around that at 470, 465 area right through there. So I wanted to just give this one today. It's more so just to highlight the chart, highlight the setup. I think this has got crackhead written all over it. But again, this is the hype right now, but I'm definitely watching it to see if it crosses one of those two areas to put on the trade.
So
Go
go
ahead.
ahead.
Sorry.
No, you go ahead.
I'm at this point, I'm just gonna watch. So I'm kind of in the same spot. I just like to watch. I see we're up there at an area of resistance. It's Nvidia. Nvidia is one of my favorites. Either direction, up or down, I don't care as long as it moves. It's a great trade. I love the range that it can get. Do I think there's upside potential? I do. I do think there's upside potential. Is it immediate? That I don't know. So I am wait and see mode with you.
Yeah, I think I'd like it a lot more to the downside. After we retest those ER highs that it had, like what was it, 515, 520. I think I might like it to take a shot to the downside there when it came up and popped after hours. But more importantly, I have a question here. Do the sex robots work at McDonald's, or
That's what
was
I
there
heard.
a partnership I missed? Is there something?
Well, Hells, you could do some research and get back to us on the next show.
Well, you brought it up,
That
so I
might be
figured
right up. That might be
you had
right up
the,
your alley. That might be right
I
up your
thought you
alley.
had the
So
info. You had the scoop. You can get a
no,
Big
no,
Mac.
you're asking the questions. You got to do the research, brother.
All right, you brought it up. I was just like, okay, well, that's a new twist. That'll boost revenues. Margins are probably pretty good on that too. So win-win for both of them. Okay, so mine is Home Depot. Home Depot, on their last ER, they had a guide down and it continued to move higher. Home Depot continues to push higher in the face of a lot of headwind from the consumer and potential headwind going out. I bought contracts out to October puts. Right now, they are not looking so good after this upside move the past few days. I do believe that the consumer is slowing down. Jason, based on my anecdotal experience walking around Home Depots, there's a lot of stuff on sale. Appliances are not moving. I think we've seen some of the other ERs come out talking about appliances not moving. Things like that, higher ticket items are not moving. Combined with the house, the home market, I think that this is one that could take some pretty good downside if there is weakness within the market. So I am short Home Depot out to October. They report in November. If I can't get traction on this, I'm going to go ahead and close it and reopen maybe out to January to see if I can get a better entry there. But Home Depot is in my sights longer term to the downside. So that's where I'm at.
Hells, from a technical standpoint, I see it. I like it short, but this would have to be a strangle for me. I think I probably would have to play both ends of this, only because we are in hurricane season, and not that any of us would want to profit from other people's misfortune and natural disasters and things like that. But as we know, Home Depot, Lowe's, all those companies, when there are major storms, major hurricanes, those tend to run. But I like the short idea from a purely technical standpoint. So that's something I'd be willing to strangle.
Yeah, I think it could go both ways for both of the reasons that you guys mentioned. I was actually thinking about that too, Maria. Around this time of year, we've always had in the room that hurricane playlist. So you've got like URI and a few others, Generac, and Home Depot is always on that list as well. So, again, we don't want to make money off of other people's misfortune, really sending our thoughts and prayers out to the people in South Georgia and Florida. But it definitely could be buoyed by spending in that category. But Hells, I'm with you all day long. I think especially when you're talking about into October with the student loan payments coming due and the housing slowdown, I can see that being a really big headwind for HD.
Yeah, the hurricane definitely came out this morning. I was looking at my phone, going through the headlines, being like, "Oh, I remember. I remember when lumber liquidators went from like 18 to like 40, and it seemed like 3 days. About that 5-10 years old, whatever it was. Based on hurricane and hurricane price action. So yeah, no, it was definitely. I was having deja vu when I was going through my phone this morning, going like, "Oh, super." I got another lumber liquidators that I have to deal with. But hey, we bought a little bit of time. Let's see how it shakes out. Ready to cut if it doesn't start moving in the right direction.
For sure. So y'all have sent in some really good questions today. We love to hear from the audience. Keep them going, right? So today, our first viewer question comes from Julian the Lemur. So the question is, what grinds your gears about the market?
I don't think we have enough time for me to work through all this. Okay. Honestly, you know what grinds my gears, and I think that what irritates me, that's what that means. But let's just say it. What irritates me the most is when I see companies like J.P. Morgan, Bank of America, Wells Fargo, whatever it is, come out with price target increases on a company like Nvidia 800s or Apple 230s or whatever they're putting going into ER, knowing damn well that they're the same jackasses that are sitting there selling the next day. I firmly believe that if you're the one putting a price target increase on a ticker, if you sell one freaking share as an entity, as a unit, you go to prison, because there's no difference between that and a penny stock pump and dump. There is no difference at all. JPM,
like Rosenblatt went from, like, I think the day of their ER or something like that, they put out that 800, and then like the day after they went to 1100. It was crazy.
Yeah, so if they sold one share, they get to go to prison. Just one share. You lied. You sat there, told people it's a buy while you were selling. You get to go to jail, dude. That's what grinds my gears. Great. Thank you, Julian.
You okay over there, House? You all right?
I don't know. I'm heating up over here. Where's my heart monitor?
Right?
Mario, what ruffles your feathers?
It's not really market. It's market related, but it's not mechanics of the market or things like that. It's similar to Hells, I get irritated with people who refuse to understand that there are two sides to a market. There's people who feel one way, there's people who feel another way, and that is what creates a market. And I feel that there are some people that, especially when they're struggling, I get very frustrated because they are so set in only doing what they know that they're unwilling to stop losing money by just learning more. So that's really what irritates me the most. It's because it's like I see what you're doing, I'm telling you what you're doing wrong, but you choose to not stop.
Yeah, I agree. And for me, it's more of a like this came up in the room today, and for me, for more or less, my ire would be directed at FinTwit, which we already know is a crazy place. But it's these large accounts who try to like engagement form from people, and they're just saying all kind of and look, they might be new, or but I'm willing to bet some of these people are seasoned traders, but they spew BS like this whole Michael Burry stuff. You know, we got it on the 13F, and it was like from June the 30th, but they're spinning this stuff and sending it out to all their people like, oh God, like what is he doing? He's shorting the market. I'm like, yo, this shit is so old. Like, why are you sending this stuff out other than to get attention, like trying to stir up stuff? You know, and it's just stuff like that. They'll throw out all kind of stuff, and it's just like, dude, you know that this is like either very like on the border of being inaccurate or it's just complete hogwash. Like I was on the Spaces not too long ago, and there was a guy with like a whole almost 100,000 followers, and he was just telling people on there like, "Yo, we are going to all. This is like end of July. We are going to all-time highs. We are not going to pull back." And the dude was serious, and I'm like, I don't see how you, in good conscience, can tell people this, just because it was like the flavor of the month at the time. So that's what grinds my gears. All right, folks. Next one up on the list, Prevails 3. If you had to start your trading career over, what would you change or do better?
You want me to go first? I'll
For
go first.
sure. Yeah,
All
whoever wants to hop right on
right.
there.
I probably would have stopped being stubborn sooner. Not that I was super stubborn, but I'm very much a person that has to do things to learn how to do it. And I wish I had nailed down my discipline, the trading discipline portion aspect, a lot faster than I did. I mean, I did it eventually, but I wish I had done that faster.
I don't know. Look, it's like hindsight's 2020. So it becomes a difficult thing to be like, what would I have done differently? I think early, it's like I don't know. I don't know. Think that there's one thing that still to this day that plagues me and many other traders that I struggle with, that has to be the biggest piece of the overall puzzle to being successful, and that's discipline. Just really understanding the fine elements of what discipline means when it comes to trading, whether it be fiscally with your money or your entries or your exits, whatever it may be, to be more disciplined in the overall game, if you will. Because it's like whether you're a new trader or a seasoned vet, you still struggle with that. That's still a thing that kind of pulls at you on a daily basis, that discipline element. It's like, so that one word, that one piece of the puzzle is one that, it'll make or break you. So it's that understanding what that actually means.
I agree. And Mario, mine was actually like right in line with yours. Like I wish that I'm also very much a hands-on person, so somebody could sit there and like explain everything to me, but I'm like I'm really not going to understand it until I get my feet wet.
Yep.
And so it's just kind of like kind of fine tuning things and locking things up earlier. And I mean, you touch the stove, and it's hot, but it's trying to lock down those things a little bit sooner. So I agree with you. Yeah, I was gonna have something right in those lines. Also all right, folks, to round it out, we got the last one. MD Usman ask, what market speculations or how do you feel about the market for September? Hells, I know you're itching to talk about this one.
So I don't. I'm going to be data dependent. How about that?
There you go.
So
we heard that before.
Data dependent, because I think the number one thing going on right now is you don't want to fight the Fed. We just came through earnings season, and earnings are fine. They're fine. Regardless of whether or not we see potential weakness in the consumer is still hanging in there. So I think the burden lies ultimately on what cracks can emerge between now and the end of September going to October. I will say this, there is some flow out to October that scares the living shit out of me. I'll say that. There's some October flow that has me mortified in the moment, but that could easily be a hedge at this point.
Mm-hmm.
I'm not seeing flow come in on individual tickers that are saying, yeah, no, we're going back to the depths. So with that being in mind, what do I expect for September? I expect it to be nimble and to be data dependent. I really do. It's a joke, but it's not. You can't fight the Fed. The Fed laid out a very clear plan for what's going to happen moving forward, and it's all based on those numbers that come out at 8:30 Eastern every morning as far as, which way we're going to go. 8:30 Eastern every morning, I'm going to be watching those numbers to see how this data comes out and try to react accordingly. But I do believe if we're playing, a game here, I'd have to say that the move continues to be to the upside through the end of the year, as long as data remains strong.
I'm gonna go with Hells on that one because I make it a point to not speculate on what the market's gonna do. I let the flow dictate what I do, and I let whatever the market wants to do that day tell me what to do. I have learned, at least for myself, it's better not to try to create a bias. If I sit there and start speculating as to what's going to happen in the future, I'm then creating the foundation for a bias in my head. That's how my brain works. So I make it a point to not do that.
Agreed. I would say September is historically the weakest month of the year. However, don't get locked into that seasonality mindset. So I'm going to borrow from both of my colleagues here. So don't want to form a bias, but just be careful because that selling may and go away thing didn't work out. So we've got some weak times coming here, but be nimble, folks, because we might go to the upside. So just be careful. All right, folks, I hear the music, so we're at our time limit. All right, folks, that means we're at the end. Thank you for joining us. Please like and subscribe on our YouTube page so you can be notified when we go live. We'll be here every Wednesday at 4:10 p.m. Eastern. But that wraps up this episode, folks. So until next week, stay green, everybody. Peace.
Bye, y'all.
See you guys.